Hi and welcome to another edition of our weekly market outlook report for the week starting Monday the 13th of April. We have a quieter week ahead of us, which started with European markets closure for Easter and slow economic calendar on Monday. On Tuesday, we should be on the lookout for Chinese trade balance data. Going forward, US retail sales, Canada interest rate decision, and US crude oil inventories will be closely watched on Wednesday. On Thursday, the main point of interest is reserved for Australian unemployment figures and US jobless claims data. The week will finish on Friday with Chinese GDP for quarter one and Eurozone consumer price index data. Also, US banks and financial firms will begin reporting first quarter earnings, led by JP Morgan, Citigroup, Bank of America, BlackRock, Goldman Sachs, and Wells Fargo. Now, let's take a look at few markets. Lastly, let's talk about gold. Gold is nice and bullish yet again, intraday 4-hourly time frame, supported by this rising support trend line. Every time we see a bit of volatility in US equities or uncertainty or risk play, Japanese yen strengthens and gold strengthens. So this is what's happening here at the moment. Gold is currently breaking out higher above psychologically important 1700 level. So that's a first level of that's a key trading level going forward. As long as gold stays above 1700, bulls are in control, potentially targeting additional upside resistances towards 1730, 1750, possibly even 1775. Some analysts with longer term view are possibly looking at 1800 now as a logical upside resistance level too. Alternatively, if we see a corrective move and a loss of 1700, then this rising support trend line and the sequence of previous highs would act as a logical downside support at 1675. Loss of that level and retest of that level from underneath would negate the bullish outlook, potentially opening the way for an extension to the downside and retest of additional downside supports towards 1660, 1650, 1640 to the downside. Thank you for watching. Thank you for listening. Stay safe and happy trading. Bye for now.